What's up, everybody? Good morning. Welcome to this week's AMA. I'm here with Alex. Dan's not quite on the line yet, but I think he's going to be plugging in soon. TM. We decided to go live and start covering the updates for the week. So we had the developer chat yesterday, Wednesday. That went pretty well, don't you think, Alex?
Hi everyone. My pleasure to be here again. So I think developers chat is went well, and the ErgoHack is going well.
Yeah, we've had a lot of interesting projects that are being submitted. I know that Glasgow dropped a list on Twitter and on the socials today. So everybody that's in there that wants to check it out, looks like there's a lot of really useful stuff I'm looking forward to playing with. Decentralizing block production, decentralizing NFTs, privacy, options contracts, P2P stuff, better metrics, multi-sig swapping, a lot to do with decentralization, which is great to see for this type of ErgoHack event. And, I think that even, a new Explorer instance, pretty cool. So there's a lot of stuff there to unpack that, could do good things for the network. Really proud of the community, what people are working on. Good ideas.
Maybe it's because of the name. So.
Yeah, I hope so.
But we are quite limited in names like this, right?
Yeah.
So how to call the next ErgoHack then? Like cypherpunk. Cypherpunk punk.
It's good. It's good. It's good. It's good to focus on that type of, I guess, first principles development anyway. I think that long term, having that built out on multiple fronts is going to be extremely valuable. It's been an interesting week, it's been a real interesting week in terms of the industry and I guess long-term direction, right? We'll see what happens and I guess on the political and front and all that good stuff. We'll see what happens on the economic front. A lot of unknowns ahead, but you know what? That's kind of what first principles are for, in my opinion. All right, looks like we see Dan. What's up, Dan?
Hi. How's it going? Dan, you are muted off.
I wasn't muted. I was just, it was like a silent film. I was channeling Charlie Chaplin. I was. Hey guys, so what's going on? What we've been talking about?
I'll just give a brief intro for what's going on in the community. ErgoHack, kind of the weekly dev update. That'll be out on Sunday. We always do like a video or some sort of media to cover, highlight what's new, what people are working on. There's a lot, kind of cooking in the kitchen that I think that once it comes out, the ecosystem is going to be in a very nice spot in terms of tooling that really, enhances the functionality, performance, use cases of Ergo. So exciting times.
Yeah, absolutely. It's one of our strengths. Our biggest strengths is the tooling. I'm going to move back a little bit. Yeah, it's there's the robustness of our tooling, and that's I've seen other ecosystems do hackathons. But really, and I've seen quite a few. I've seen Ethereum hackathons. I've seen Solana hackathons. And it just I don't know. ErgoHack always has this really like organic and I don't know, whatever the right word for people really thinking about solving problems. You don't have to tell them, okay, here's what you need to do. Give us write us an application that does this and this and this and this. We set a general theme of the hackathon, right? And then people just come up with their own solutions, and I think that's great. I was part of a few hackathons where I was actually a judge, and I must say, a lot of times with these hackathons, especially when you try to give people a problem to solve, they'll try to solve the easiest problem you give them. So, you'll give them like 3 different things, right? So you pick from A, B, C, and always like 90% of the people are going to try to solve whatever is the easiest. If A is the easiest, it's the one that people want to solve, and it's always like, well, what about B and C? And it just I don't know. Sometimes it kind of seems like, well, maybe I should have not even given up A because that just was not very interesting. So yeah, ErgoHack. I'm really looking forward to seeing what comes out of ErgoHack. I really am looking forward to using what's going to come out of ErgoHack. So that's a big thing for me, I think. Right. So from my end, just a few updates. Still keeping at it with speaking to funds to come into the ecosystem. Actually, Joe has also been doing the same thing, and we're going to be kind of progressing as things develop. Again, it's not a very easy task. You really have to just explain value propositions to even somebody who's really kind of in technology. You have to really explain to them, okay, so here's the potential that you can derive from the ecosystem. Here are the top players, right? Here are the people that are making things happen, and here are the people that could make things happen if you gave them the opportunity. It's just all about alignment. And so that's really what we're doing right now. As the bear market still, though we've been getting some movement, but the sentiment is still kind of slow burn. So that's where things are. Not a lot of noise. Not a lot of okay, tomorrow I'll pull the trigger. Next Monday we're going to fund 57,000 projects and go 1,000x. It just doesn't happen like that in this kind of market condition, but it is happening. And the same with exchanges. We're speaking to actually 2 exchanges right now. We will let you know as things progress. All right, Joe. So what do you say we get to some questions?
Yeah, go for it. Let's hop into the.
It is an AMA sorts.
Yeah. Let's get to the questions.
All right. So let's see. All right. Well, I think this is a nice one to start off with, just since we were talking about ErgoHack and all the different value that's being derived from it. So Seb asks, what is the project you're most excited about? You are the most excited about. What about you, Joe? Let's start with you.
Well, that's a hard question. They're different, and plus I'm a judge, so it's kind of. I think that if you look at long term, there's a lot of interesting use case with Lithos to disrupt proof of work. I think Ergo ties in terms of light nodes is pretty awesome to see. I think Sigma O with options really has a lot of potential financial use in terms of I don't know, trying to arbitrage or maximize the efficiency of trading. New Explorer instance would be pretty great to see. So there's a ton of use cases. I'm sure I missed some people's projects, and don't. I think that's going to impact the judging. We got to see where things end up, right? But in terms of high level ideas and use case moving forward, there's a lot to unpack with each project. And ultimately, I think that's really the best thing to see in a hackathon is something that it's okay, that idea is potentially powerful. Then it's just a matter of, okay, well, can we take that idea, and kind of bootstrap it in reality and see how it performs, and can it reach the potential? Because there's a ton there, So I don't think I have necessarily a favorite, because each of them kind of leads to like a thought experiment. Well, what if, and then how can you, maximize the potential of that? It's a lot of road for each of them.
What about you, Alex?
Sorry, I was mute off. So pretty much the same. Also, I'm following Ergot, probably it's called now, project by Rosware, which is about doing a light client in browser. So I need to check details, but sounds pretty mind blowing. Helped with Sigma O and talking with Haley about it, and in general, a lot of interesting projects. This hackathon is very well packed.
Yeah.
Great. Okay, well, we got some good questions here about stables. So, hi guys, what are your takes on Paxos and the recent situation? And can SIG-USD be better than BUSD? Well, let's start with you, Alex. What do you think?
Oh, so in 2022, right? Well, the general line of thinking was quite opposite, right? So after the Terra crash, there was popular opinion that you need to store your value only in centralized stablecoins such as Tether, BUSD, and now the wind has changed direction. There is value apparently in algorithmic stablecoins again without central entities, but biggest algorithmic stablecoins already damaged, right, with the reserves. Now having centralized stablecoins, in case of DAI, even treasuries, right? It's now quite complicated landscape. So, along with a lot of unclear things about algorithmic stablecoins, right? We now have clear mess about centralized stablecoins. Have a luck. Trying to understand where to find stability in such environment. Maybe just holding ERC would be a more stable option, right, for now. For SIG-USD, to 2022 wasn't harmful, right? Opposite to Terra and Neutrino, it stands, and reserves were pretty high all the time. There are some things to consider in regards with improving the design. The absence of centralized entity, is a good thing, right? Apparently, and I think for SIG-USD, despite some maybe problems, right, due to its huge over collateralization, there is also value, right, in its stability. So something like that, and this situation that we have, it's in the development. Let's see. I think we will see a lot of interesting things, let's say, in 2023.
What say you, Joe?
Oh, well, to be honest, in terms of like the schools of thought for stablecoin, I tend to be fringe, right? And it's good to start with that because, uh, like my opinion, starts with like the fundamental idea: why are we using fiat? I know it's economically efficient, right? It reduces friction, but it also creates massive vectors of attack, specifically on the regulatory front and the potential for censorship. And plus, to some degree, the dollar is a shit coin, right? If you look at how it's produced and how it's distributed and, who's in charge, it's kind of a centralized shit coin. So I've always thought of this idea, how can we create some sort of decentralized store of value? And I actually think that pegging it to fiat probably is not the best long-term solution to that. It's kind of a short-term solution to try to create some sort of digital, cash liquidity type situation, and people are familiar with their own native currency. So I guess in terms of like the user experience, it kind of makes sense. But the reality is, you look at like most fiat stablecoins, right? They're backed by basically yield-producing instruments, right? Because if I'm going to run a stablecoin, I don't just want to hold dollars, because net I'm running a service and my dollars aren't really earning me much. So usually what happens is they go and they either buy government paper or corporate paper. And so now you have this treasury that usually we can't see or verify of securities that they bundle, and they take a percentage of the yield. And then you have some digital derivative that's backed by securities, which is, is a digital derivative that's backed by securities a security, or is it? I have no idea. I'm not a lawyer. I don't even want to play in that. I don't want to swim in that pond, right? It's dirty. So then you have another question that comes about in terms of like governance, right? So as Alex was saying, you have some decentralized stablecoins where the treasury of them is backed by a centralized, derivative that's backed by securities. And so you look at what's the ultimate asset that's backing some of these fiat stablecoins. It is, in a way, it's subsidizing government debt, right? And that's kind of a funny thing that, here we took like P2P money that's like, hey, we're going to resist the state, and you build a cash mechanism on top of it that, actually, has the majority of the liquidity in the crypto space and is kind of like the primary use of funds and trading, and it's subsidizing government debt, which, kind of is a strange animal in terms of decentralized money, right? So I've always thought long-term, I think that moving towards commodities like DEXI is a good idea. And long-term, I think some sort of, index of variety of different commodity assets, maybe, that could be more complex depending on, what kind of assets are available on chain to play with, and building a basket, right? That way you have more of a store of value that will always, in theory, buy, a variety of commodities. And if you, structure that right, you can say, okay, like lumber and oil and gold and things that translate to, kind of pricing of goods and inflation in real life. So my personal opinion is that fiat stablecoins are a dumb idea. It's always been that. And I also hold a governance token to SIG-USD, and I'm doing a hackathon project in terms of how to improve it. But that's like it's always been kind of my default position, is that I think it's a little silly, and it presents long-term risks, right? Because the reality is stablecoins exist at the blessing of central powers to some degree. And we're seeing that with Paxos, to where, they're creating legislation that is kind of picking winners and losers in terms of who can do that. We'll see how it plays out.
Yeah, I mean, I completely agree with you. I was actually also kind of always felt like pegging a stable coin, pegging P2P, any kind of P2P currency to a dollar value is sort of like, I guess measuring electrical lights and candle, in candle power, which is, it's an adjusted measurement, but it still kind of sounds silly. It's an electric light. But why are we measuring it by how many candles it is? It's not that, but I'm just saying it kind of seems to me that way, that we're trying to establish our own financial ethos, and while doing that, we're still looking at the legacy ethos to quantify it.
No, it just
really,
for me, it's risk, right?
Yeah,
like if you're trying to create something that's a stable store of value, why would you do it in the riskiest environment? That makes no sense to me. It never has. And, back in the day before I had to behave, I would just call them centralized bank garbage coins.
Well, actually, CZ said something yesterday about how, he doesn't think that in the future stable coins will be pegged to the US dollar.
Mm. The question is then, is he just trying to replace it with a different fiat? I think we need to get away from that.
That's exactly my point. I mean, to me, it seemed he was saying that, to me, that it seemed like he was saying that, oh, well, everybody pegs it to the dollar, but we should peg it to something else. And then somebody brought up, well, you should try to peg it to the Japanese yen. I'm like, no. Do not peg it to the Japanese yen, please. I mean, and this is, this is exactly what we're talking about. The Japanese yen 2 years ago was 108 to $1. A few months ago, it was 142 yen to $1. Mm-hmm. So that's like a 25% loss of value. And this is in a short amount of time. And we're talking about a fiat currency that's really not supposed to do that in a developed economy. I mean, you're not supposed to have that much wobbliness going on, and it still happens, and especially with these economies. And so to really think that by pegging it to fiat, you're going to create some sort of stability is really stupid to me. Mm-hmm. In fact, what I always thought would make more sense is to create a stable coin that will then stabilize at a value, whatever the value is, and you don't have to have the stable coins be pegged to one fiat currency. It's a stable coin. It has to be stable, right? So it has to amortize for volatility. I mean, that's the basic function, so that you can then, hedge your risk. That's it. It doesn't. You don't have to peg it to anything specific. You just have to make sure there's stability, and that stability can be attained without pegging it to a dollar, to the yen, or to the pound, or whatever. And so, I just always thought it was kind of stupid to do that. To be frank, and I really hope that we get away from it. And actually, your idea with kind of following the commodity market to really quantify value, I think, is a lot more. It's a lot more feasible, because I mean, commodities by a large part are really a lot of the value is kind of determined by supply and demand in the free market. Of course, there's prices that are set in some places and whatnot. In the end, kind of like, a lot of times you can average it out, right? You said, you take gold, oil, take all this stuff. In fact, with Palmyra, we're kind of thinking of having a similar instrument for a one of the native tokens of Palmyra, so that we don't have to use somebody else's stable. We can actually create a stable that is it utilizes the volume and the value with the ecosystem to amortize its own value. So I just think that we should really stop doing that as an industry. We should really stop just trying to create associations to the legacy financial cabal. It just seems seems a bit of a cognitive dissonance to me to really do something like that. Anyway, let's see what else is cooking. All right. Okay, so this is an interesting question. I think what Augustus Kent is talking about is Rosen. And so he asks, when Ergo and Cardano become cross-chain integrated, which ecosystem gains the most from the connection? I'll kind of give this a shot, and I guess maybe Alex and then Joey can kind of follow up on this. But it just depends on what gains you value the most for yourself, right? So, of course, there's more volume in Cardano, just a bigger ecosystem, obviously. So you're going to be bringing in value from Ergo to Cardano, but from Cardano to Ergo, I think would be a higher influx because people will start realizing, well, the technology is so robust. Now, we will be able to utilize Cardano, and so I think the first influx would actually be Cardano gaining more Ergo cross-chain action. But ultimately, I think that once the Cardano ecosystem really experiences the power of Ergo or interacting with Ergo, I think it'll actually go the other way. And I think a lot more Cardano people are going to start really kind of cross-integrating with Ergo and hedging things in Ergo and building an Ergo just because of the tooling, just because of the ecosystem, and just because of what it is. Now, as far as tooling, I think that both ecosystems will gain, kind of equally, I think. Ergo has a lot of tooling it was already launched with that can be utilized within Cardano that hasn't been launched in Cardano yet. And I think that if we cross-integrate, that will give the ability to bring some of this tooling cross-chain and to really utilize it within Cardano and to kind of build together from there. So that's kind of what I'm thinking about this. What do you think, Alex?
I think, in the first place, we will get Cardano tokens on Ergo and vice versa. So in regards with Cardano assets, that means USDA. I don't know whether it's launched on Cardano or not yet.
I don't think it's launched yet, no.
Also, Jet, right? And this is interesting because, very similar design actually, but there are also some differences. Then, you can choose on Ergo, for example, whether to use CQSD or, Jet with slightly different mechanics and also modular Rosen bridge assumptions. Right, so there will be liquidity then, I believe, and then Spectrum guys, for example, are already preparing for that future with stable pools, how to call it. Specialized pools for swapping stable coins, like Curve is doing on top of Ethereum, for example. Right, so unlike traditional constant product pools, they are working in a more efficient way when there are two stable valued assets of the same kind, right? So, for example, Jet versus CQSD, CQSD versus USDA or USDT, and so on. That's how it will go. In a short-term perspective. And then, so you can, for example, use Cardano assets to issue bonds on Ergo, right, with Sigma Phi, or to lend via dark pools, or well, to issue options with Sigma, and so on. Then it means more collateral, right, for Ergo DeFi and also Cardano DeFi, right, and as Ergo will be participating in those DeFi schemes as well, also higher TVL for Ergo, and so better appreciation, right, for Ergo. And then, it's kind of loop also. So better appreciation means more assets, and it means more liquidity coming from outside, and better TVL and even better appreciation. All right, and also we have still reducing emission, right, on Ergo. So it would be a quite interesting game, I think, in 2023, 2024, maybe 2024, especially, right, with significant flows of liquidity. And emission been sharper, emission reduction been sharper in 2024.
What about you, Joe? What do you think?
I think it just has to do with timescale. I mean, the Rosen itself is designed to be really flexible. So, like the actual use case extends, beyond Cardano. That's one partner, and then Bitcoin, Ethereum, going to other ecosystems. And what does that do? I think for both, it basically builds a larger market for potential collateral. I mean, I agree a lot with what Alex said. You have like IUSD from Indigo on ADA, which is an interesting stablecoin framework. It'd be nice to see some of that potentially move on to Ergo, or who knows, maybe even have the potential to be something that you can create with wrapped Ergo or something. Who knows? Like there's a lot of individual partnerships that can appear from that type of collaboration. And I think like what is the who's going to gain the most? It depends on the user and what they want. Right. I think ultimately, long term, they're different tools, and that doesn't mean that one tool is not effective. It just depends on what's the job that you're trying to do. Right. The right tool for the job is important in life. So what are you trying to do? And I think long term, you'll see a benefit of one ecosystem versus the another one, just based on what you're looking for.
Yep, absolutely. All right. This is a good question, I guess. Well, because it's just been there's been a drama in the Cardano community over this. So we'll just I think people want to hear this. So, Alex, what are your thoughts on contingent staking in Cardano?
Oh, so I'm not quite following this story yet due to ErgoHack, to be honest. So I saw some tweets, but haven't checked details. If there are any details, I'm not sure about that even, like specification and so on. What's this contingent staking?
Well, Joe, how about you?
But better tell me, because I'm not still following. I still haven't found time to follow.
No, I can. I'm kind of on the outs on that too, but I can give you my opinion. Like we've seen a lot of let's say regulatory crackdown in the last week or two, and that's got people concerned and asking long-term questions. And like one liability that stakeholders potentially have is through the initial stake pool offering, I think, ISPO, where, they have the ability to do some sort of swaps and emit new coins. And, you can even look on like ErgoDex recently, or not ErgoDex, shit, they're going to make fun of me for that. Spectrum. Spectrum had their IDO. And their legal team said, hey, we need to have some sort of mechanism to make sure that you're not transmitting and having initial seed investors from places that could potentially create liabilities for you, right? And so, they had to, put some mechanism in their back end to basically make sure that only, people from approved jurisdictions could play, right? And that's unfortunate. I was happy to see that, stake pool keys started showing up on like the auction house immediately. So there was immediately some secondary market for that. So people that didn't have the ability to whitelist within the lines at the playground could at least participate at some type of markup. It gets a little more interesting though, because stake pools produce blocks, right? And like if you look at that type of IDO, it's not really being hosted by block producers, so it doesn't have that same potential issue where, like, if I were running a stake pool, I'd have to ask myself, what liability am I inheriting? In this type of partnership, and what are my personal liabilities then, and et cetera. So, it's some mechanism to try to get stake pool operators to protect themselves, right? Which I don't think that's necessarily a bad thing. I think everybody should understand their liabilities in life, and try not to overextend that. The question, I think long term has to do with some people say, okay, well, if you do some sort of permission staking, what happens if the government comes back and says, hey, stake pool A, we want you to essentially do what Ethereum is already doing. We want some compliant blocks, right? Because stake pool operators are block producers. And, then like the question is, will like the game of being included in a block stay fair and open, or will it start to have kind of a tiered system to where, like, in theory, if you did have part of the network that had to produce OFAC compliant blocks, it messes with the race conditions, right? So somebody from a let's say non-whitelisted economy now suffers a disadvantage in terms of the race to the block. So they're now like a second tier citizen in a decentralized network. That's a problem. Now, that's not what's actually being discussed. That's the fear, right? And I think that if like the Cardano community really wants to just kind of put that to bed, they need to answer that question. Like, is that a problem for the community? Is that something that's worth protecting? It's not a first order effect on this whole what is it called, contingent staking stuff, but it's a potential that scares people, and so, like, both sides, like, on one hand you have people running a business that have liability, on the other you have like the integrity of the network, and so then people fight, which I think is a good thing, net try to keep it above the belt, no scratching the eyes, and hug afterwards. But it's a good discussion to have.
Doesn't always happen, unfortunately.
Yeah.
The debate is good, and I see, I see both sides have some good points. And I just think this mostly it is, what I don't like about the way the debate has been going is some people just kind of get abrasive with it. They're just antagonistic. And regardless of which side you're on, you can't get antagonistic about this stuff. It's counterproductive. So regardless, and I've spoken out about this on social media. It's, like, talking about it doesn't mean you're committing to it. Talk about it. Talk about it. Actually talk about it. If you have a point, then drive that point across. Don't try to nail somebody with it. That's my main issue with the way this stuff is handled. There's some people that are just have this way about them, and it actually kind of pisses me off or irritates me because, I actually agree with some of the things that they're saying, but then the way they deliver it, I'm just thinking, God, you asshole, can't you just say it like a normal person? I mean, why do you have to antagonize people? Or it's just,
well,
that's the part that I don't like.
There's another concept that happens a lot in the crypto industry, and I just call it ghost fighting, right? Because it's like you build on what Alex said. Where's the specification? Like, we don't do people even know what they're fighting about yet? That's like you have two projects that have tokens with no actual code or no application fighting over what's better and what's the future, right? You need some like practical thing to look at from an engineering perspective, and it's good to talk about specs. Like I think that if you're going to be a blockchain, you need to keep race conditions fair. That's important. Otherwise you have a tiered system, and if you have a tiered system, it changes like the dynamics a lot. I think that it is worth protecting. Now in terms of like giving stake pool operators the ability to hedge their liabilities, that's not a negative thing, and I don't know why they have to be necessarily at odds with each other, but I can certainly understand like the second order effects and how that would be a concern, because the reality is in this type of situation, somebody can ask, hey, how do you think it's going to play out? I usually would just say 50-50. It depends on the intent and it depends on the incentive, right? Those two things is 50-50. We'll see what wins. I have no idea, and I don't really have a horse in the race, but it's good to see discussions anyway.
Yeah, it's good to see discussions, but like I said, it's just not good to see abrasiveness. Again, some people are acting like this is already like it's just coming. It's coming, and I mean it's a discussion. There is no planned protocol upgrades. There is no, I don't even think there's even a CIP, and it just really needs to be a lot more. A lot less dramatic, I think. And, I keep seeing people just, if this is the hill I'm going to die on and let be it. Like, what is the point? What hill are you going to die on? Just have a conversation. You're not going to convince somebody by being stubborn. Lay it out, at least, if you lay things out, if you have a civilized conversation about this, at least you can say that, yes, I have laid out my point. I've made my point. I made it in a really, in an articulate and proper way. If you don't agree with it, if you don't have a proper counter argument, then I will do as I wish, but just this whole thing about calling people names and, fighting. It just kind of
as usual. Sometimes people just ask the wrong questions. I think the right question to ask has to do with the race conditions to the block. Like if there's any way that that's going to be compromised, that's a big problem. And so even if people are in support of that particular idea, they need to come out and say, where is their position in terms of race conditions to the block? Because if that becomes a tiered system, which is people's fear, that's a problem. But I just think getting ahead of that, is probably a good idea.
As a core developer with some experience, I think the best thing to do here is to formulate a question, right, which will cause harmful community split, right, and then trying to avoid this split.
Yeah.
So, KYC, OFAC compliance, in theory, very damaging, but, observing Ethereum, similar, not right in practice, at least for Ethereum community. But communities are different also, so.
Yeah.
All right. Well, let's let's go to our next question here. And I don't know, do you guys want to do more stablecoin stuff or
Sure.
You want to do something else? Okay.
Whatever's there.
All right. So let's do this one. So SigUSD worked great so far. What are some real risks involved from any perspective? Can you can think of? What would you reply to those that say that the algo stablecoins are all the same and will fail? So, I mean, just from my end, and I'll let you guys chime in on the SigUSD part, but I think just it's. You can't paint all algorithmic stablecoins with the same brush. You just can't. They work differently. Luna didn't fail because it was an algorithmic stablecoin. It's because it was a bad algorithmic stablecoin. It was not thoroughly thought out. It was under collateralized. It was bound to fail, and it was this attitude of move fast and break things that really broke things, and things broke. They moved too fast and things broke, and you can't do that with this technology, So I think that people should stop getting stuck on algorithmic and start thinking about what exactly does the algorithm do. For example, JED is over collateralized. So there is a mechanism where, if it goes under 400%, you're not going over collateralization, you're not going to be able to mint the reserve coin anymore. So that's something that Luna didn't do well at all. And I mean, amongst other things. So again, just from my perspective, that I think that people should stop getting stuck on algorithmic stablecoins being algorithmic, and really start thinking about what does the algorithm do and if it does the right stuff. What do you think about that, Joe?
No, it's basically been the ErgoHack project that I've been working on. I think from like the first question you need to ask is each algorithmic stablecoin has the failure potential, right? And the question is, what are the conditions that it operates under, right? And a lot of the times that's not even discussed, which is pretty sad to see. I think that because that risk threshold parameter isn't even really understood, known, or looked at, that's what led to UST in my opinion. People are like, hey, this is potentially a problem. And then you had the creator that's like, screw you guys, have fun being poor, rather than saying, okay, we created some product. How do we understand, where it's most efficient, what its risks are, how it could fail, and then build to potentially prevent that. So I think if you're interested in digging into that, you can definitely read the little hackathon deal I'm putting together, because it answers this question in more detail than I have time for here.
What are your thoughts, Alex?
Every stablecoin has some instability zone indeed, and when it's in this zone, so it's then up to market makers, right? Whether they can hold the situation or not really. So in case of neutrino stablecoin, for example, so the market maker stood for half a year even, right, before failing in supporting the peg. Which wasn't held algorithmically already for some time. So in case of UST, it's pretty much the same, but market maker wasn't able to hold the peg for a long time, right? And so in case of SigUSD, there are no any known market makers, right? So there is some liquidity on Spectrum, but not that much. In regards with instability zone, it's just much better designed, right, in regards with catastrophic events. And Terra was badly designed indeed. And then you design a stable coin, right? Considering possible failure scenarios. But there is a chance of failure. Anyway, but it's true also for other fiat derivatives, right, in fiat currencies as well. So the theoretically there is some possibility of failure anyway, and it's actually very careless, right? And also disrespectful to investors to hide them, right? So Terra did, and many other stablecoins teams actually also are doing that.
Yeah, it's pathetic when people ask about risk assumptions and they hear "have fun being poor." Like that's to me is a sign of run.
Yeah, and it was, and that wasn't the first time he pulled that kind of crap either. He was just he was on this like ego trip. It was like, I mean, seriously, somebody is a little bit was the word megalomaniac ish, Anyway, right. Well, let's finish off the Q&A with a nice as Terry says, lighthearted question. So, what are you guys looking forward to this year, including lighthearted stuff? What about you? What are you looking forward to this year, including your lighthearted stuff?
Me?
You're the only Joe.
All right. Well, I've been freezing my ass off in winter, man. I'm looking forward to the first aspen leaf on my property. Sign spring's coming.
Spring is around the corner, ish. So what else, Joe? Anything else? Is that it? Just
you said lighthearted
anymore?
Yeah, you said lighthearted stuff. That's what I'm looking forward to. First aspen leaf on my property. Sign spring's coming.
Well, what about semi-lighthearted stuff, middle-hearted stuff?
Oh, DeFi stuff on Ergo I think is going to be interesting this year. There's a lot. I think extended UTXO offers some unique potential tooling. I still think we're like catching up with where we see a lot of like base tooling that already exists on EVM. But I do think that with grid bots and things like that, we have the ability to create stuff that's unique to extended UTXO that may not be as performant in other chains. So. I think DeFi and then kind of the evolution of DeFi that's built on the strengths of our network is going to be interesting to watch. But still, I'm looking forward to warming up a little bit more than that right now.
Yeah, same here. It's been snowing an awful lot in Osaka, and then it's actually the first year it's been snowing this much. For me, is just I'm definitely looking forward to not going outside. And snow doesn't bother me as much as the humidity. That out here you get we have a pretty humid climate. So when it is cold and it is windy, when it's freezing, when it is windy, that's like 10 times worse than being somewhere in like Switzerland or something where the climate is like regular and you get snow on the ground, but it's it's just regular. It's not this so pierce cold that you just can't get away from and you have to wear 15,000 layers. Yeah. And I just think I'm just looking forward to what we were talking about. A lot more cross chain action, cross chain projects, cross chain collaborations. I am looking forward to Rosen really very much. And just looking forward to really just going the way we've been going. I mean, the past year has been fantastic. I think we've experienced a enormous amount of growth, and I can't wait to see what happens next. What about you, Alex?
Oh, so actually, a lot of work ahead as usually. For the node development, the plan is to merge the code, which is already there for bootstrapping with utexo set snapshot, then nipopos, then improving specifications, then I think to sit with profiler again for some time, find current inefficiencies and making the nodes more efficient. Writing a lot of forum posts on the way about the protocol and node design. So some topics already in the plan. Also thinking about layer 2 solutions and how to execute optimistically big programs on Ergo, so with small on-chain footprint. There are some known solutions which could be adopted. Maybe on the way there could be optimizations pretty significant and also pretty specific for the Ergo design. Maybe on the way, it would be possible to find time to write and publish another paper. Hopefully this year. I can publish a paper again since 2020, I guess. All right. Doing chain cache for ErgoHack, which is kind of alternative blockchain powered monetary system, could be seen as a kind of stable coin also, but very different from all the designs. Not quite really a stable coin you can think about. So we'll do a paper on that. Actually, it's already half done. And then I think to consider some layer 2 design for chain cache. As a primer of layer 2 design. So initially we consider doing mixing on layer 2 as an ErgoHack project, but it seems it's quite too ambitious. Consider the time limits. Maybe the next hackathon. Something like that.
Well, it all sounds really exciting and very light to medium lighthearted to me. Well, anyway, guys, I think it's a good place to leave it off for today. Sorry about being late, but I think we got some really good questions in, some really good discussions, and thanks a lot for joining us this week, and see you next week. Thanks a lot, everyone.
Have a good one.
Thank you, guys. Bye.